So I own 5 shares of 5 different SPACs that I'm allowed to talk about. So the first 3 I might kick to you, and those are Chamath, the IPOD, IPOE, and IPOF. I can briefly just mention the difference between them. They were 3 SPACs. The biggest difference is the size. IPOD is $400 million in size. IPOE is $700 million in size, and IPOF is $1 billion in size. So why do we like these so much, and why are these trading at such a premium? And what can you tell us about these?
Well, basically, you were talking about management quality, and the Chamath Palihapitiya is quality personified in terms of this. He's really been a big push in the SPAC world for technology companies. He wants to give an alternative method for tech companies coming public other than the IPO process, which he sees as being really problematic. And I was lucky enough to get to talk with Vivek Garipalli, who is the CEO founder of Clover Health, which is the SPAC acquisition target for IPOC, which was the third vehicle, the third SPAC vehicle there. And Vivek explained to me that one of the benefits of the SPAC process, especially with Chamath, was that the process looks a lot more like what privately held companies are used to talking about in a venture capital context. Nobody expects startup companies to have much in the way of past financial results. It's all based on growth, future growth prospects. The traditional IPO process has some trouble with that. And that's part of why you see so many companies, especially in the tech industry, wait so long before they come public in a general IPO. It's because they need time to generate the growth, backward-looking growth that will demonstrate to sort of Wall Street's traditional IPO folks what the deal is. And so it's because the company behind those IPOD, E, and F, Social Capital, head of Sophia, has such a good track record. They've got their IPOA turned into Virgin Galactic. Their IPOB just started trading under its new ticker symbol Open Door Technologies, the online real estate folks that I'm sure, Matt, you could go into great detail about. IPOC's set up to be Clover Health, a health insurance, Medicare supplemental, and also a sort of a healthcare information tracking system company play. But we have a lot of confidence that whoever ends up being the companies for IPOD, E, and F are going to have similarly interesting philosophies. I think that's why the market is trading them at a premium to that $10 share price. We had one question. I got to scroll down to it. Hey, why does IPOA still trade as its own ticker symbol? To my knowledge, it doesn't. I'm not sure. You can sometimes find those symbols before the deal before a merger takes place, before the name change happens. But at some point, those old ticker symbols are going to be out of date. Even if they show up like on a Yahoo Finance or something, you might notice they aren't updating the quotes anymore. You got to go to the new ticker symbol for that. So don't get confused by that.
Yeah, it might be showing up as zero volume. And a couple of the things to clarify about the IPOD, E, and F. IPOD trades at the biggest premium. It's not necessarily because that one will get a deal first. They're not necessarily going to happen in order. IPOF could get a deal before IPOD and E. The primary reason, in my opinion, that they're trading for the price they are is supply and demand. IPOD is a smaller SPAC, IPOE is slightly larger, and IPOF is slightly larger than that. So when an investor decides to buy all 3, like I did, I put this roughly the same amount of money in all 3. There's lower supply of IPOD, a little more supply of IPOE. So when investors buy them, the supply and demand dynamics are what's causing that price action. It's not necessarily that IPOD is going to go first. That's not the case. There's no rule that says that one is to be first. In fact, in their S1 filing, it specifically says that IPOE and IPOF are going to be competing against them for deals. So that's something that's important to know. Another one that I recently bought in my own portfolio is Starboard Value Acquisition. If you're familiar with the Starboard Value Fund, they're one of the most successful activist investors of all time. The ticker symbol for their SPAC is SVAC, by the way. They're one of the most successful value investors of all time, most successful activists. 84% of their activist campaigns have made money, which is a pretty impressive statistic. And I bought them not just because of their track record, but because their investment style fits my investment style. They're value investors. They're not looking for the next big moonshot tech play. They're fundamental analysts. Their board members are, a Harvard Business School faculty member, a Columbia business professor, who are really like going to crunch the numbers and find a great value investment. So Starboard Value is just a fantastic track record, a management team I would bet on over and over again. And this is their first SPAC, so I'm really excited to see what they can do with it. I also bought a little bit of the Pershing Square SPAC. Ticker symbol is PSTH. It's the only one I know of that doesn't have a $10 par value for their shares when they first started, and it's the biggest SPAC in history. I know Dan knows a little bit about this one. It's a $4 billion SPAC. What are the advantages of it being so big? Is that an advantage or a disadvantage?
Yeah, it's an interesting question because the size of the SPAC component, basically how these deals end up going down is that you buy a company that's generally bigger than what the SPAC has on available. And where the extra funding comes from, usually the company itself only wants to sell a portion of itself. It doesn't want to sell the entire amount. Insiders want to hang on to their shares. Early venture capital folks don't want to cash out just yet necessarily. And so the SPAC is only buying a certain percentage. In addition, usually the SPAC has relationships with institutional investors to do what's called PIPE financing, private investment in public equity, I think is what that stands for. And, basically it adds money to the deal so that the privately held company gets the amount of cash that they're targeting, even if that amount of cash is different from what the SPAC has on hand. And so, that is like that's kind of, that's what's going on behind the scenes as far as, like how that ends up working.
Okay, so I'm curious to see what their acquisition target is going to be.